I'm excited to share these insider tips to market and fund unlimited LTV HARP loans. If you are a beginner to HARP or you're an expert with HARP, I'm going to guarantee you're going to get some great insider tips and tactics on how to benefit from this new niche marketing opportunity or this niche product opportunity. My first panelist with me today is actually the sponsor of today's webinar. His name is Jeff Bush. He is the president of overflowworks.com, a direct marketing company. He's got over 18 years of direct marketing experience, and get this, he's mailed over 1 billion pieces of direct mail in the mortgage industry. He's owned mortgage banking companies that closed over 5,000 loans, over almost $2 billion in loans from 2000 to 2007. So he understands the frustrations and the challenges that individuals deal with when they've got a deal but they just can't get it to funding. And so we're excited to be able to have this opportunity to share his expertise with you and have him share a little bit about what he's been able to do with Overflow Works and marketing to Fannie Mae owned borrowers and getting HARP loans actually calling in to mortgage companies. And so we're going to hear a little bit more about Jeff's marketing tactics and his background from Jeff right now. Jeff, are you there?
Yeah, I'm here. Thanks for helping me put this together, Dave. Appreciate it.
You bet. Well, talk a little bit more about your background, because you've been going around the country talking to mortgage companies and associations about this idea of marketing to HARP qualified candidates. And so talk a little bit more about the market and just maybe a little bit more about the marketing that you do, and then some of the frustrations that you've had from some of the clients that just couldn't get the deals done, and why you put this whole webinar concept together with these expert wholesale lending experts.
Okay, yeah, I can share on that. Let's see, a few months ago, after reading up on HARP and what was going to be coming out in April for the unlimited LTV, I just knew that this would be a big year for the mortgage industry and another refi boom. So trying to get ahead of the curve on the marketing side, we went out and found a way to get a list of all the Fannie Mae owned mortgages in the United States. I've got data for pretty much every city and county in the entire United States. So we've got a list of Fannie Mae owned mortgages, and we started testing some direct mail letters and see which ones we're going to get these Fannie Mae owned mortgage holder homeowners to call and to refinance their loans. So we started on this 90, 120 days ago. We've got about 60 clients right now around the United States in about 35 different states actually that are doing this marketing with us, and we've learned a lot from taking thousands of inbound phone calls, funding hundreds of loans at this point, HARP specific loans, Fannie Mae, that we just feel like we had a lot of information that we could share and help some people. I mean, obviously my goal is to to encourage more people to do marketing through me, but the big goal of this webinar is not to push all my marketing things. We want to help our mortgage brokers and bankers that are out there fund more loans and understand this program better, because one thing that I've noticed is a lot of the mortgage companies that I've sold the marketing to, I mean, we really haven't had any problems with the phones not ringing. I mean, the phones are ringing off the hook. They're getting a lot of calls from borrowers that want to refinance. The challenge has been, how do we fund these loans, And I've heard all the issues out there, mortgage insurance, EA 1, 2s, and 3s, what lenders will go over 125%, I can't bank these on my warehouse line. I mean, I've heard every objection out there. So we kind of put this webinar together today to have 3 expert lenders that can talk about what they're seeing, internally funding hundreds of these loans. What are the deal killers? What's going to help? How do we put these things together? And the more successful my clients are funding loans, the bigger orders I get for marketing. So that's the honest truth. I mean, I'm doing this to help. And I've got a lot of my clients actually on the phone today listening in, trying to learn something on this. So did I cover all the questions? That was a lot, Dave.
Yeah, that was great. Thanks for clarifying. And just to give those individuals that came on the call and the webinar today to learn a little bit more about the services that you offer and maybe how to go out there and generate HARP leads, walk them through the process of how you identify qualified Fannie Mae owned mortgages and kind of the strategic process that you go through, and then what you're doing to market to them. And then we'll get into the real specifics about how to submit, qualify, and fund these loans using some of these insider tactics that the experts are going to talk about.
Well, what makes us different from any other direct mail marketing or any kind of marketing company out there in the United States right now is we 100% guarantee our list to be Fannie Mae owned mortgages. So a lot of companies out there pulling data saying that it's likely to be Fannie Mae or that they're 75% accurate. What we've done is just created a system that verifies with Fannie Mae that the loan's owned by Fannie Mae. So we can 100% guarantee everybody we're marketing to has a Fannie Mae owned mortgage. You know, you can pick your loan amounts. Typically it's 150 to 417. We look at the loans that funded April of 09 and older, ensuring that, you know, Fannie Mae bought the mortgage in the right time frame. So we've just perfected the database. So we sell these lists to mortgage companies, and some of them are out there doing their own mailings, or they're calling these people because some have phone numbers. Or we design, print, and mail a direct mail letter to these customers, and then, you know, invoke these incoming phone calls to our clients. So the data, the direct mail letter, we do a little bit of email marketing. So we sell lists to some customers, and some use us for the full service. So
great. I'm doing a poll right now. If you've navigated away from your computer screen, come back and cast your vote, and I'm going to show one of Jeff's best direct response marketing letters and strategies. So if you can, go ahead and cast your vote. I'm just kind of curious, how many of you have actually closed some of the HARP transactions or have some loans in progress? So if you can go ahead and cast your vote to whatever response is best fit for your situation, we'll go ahead and close that survey up in about 5 seconds. So 5, 4, 3, 2, 1. Thanks, everybody. I appreciate you participating in these surveys, because this will help us in our panelists today to learn a little bit more about how to customize their particular responses to the people that are on the audience or in the audience today. All right, so Jeff, walk us through a little bit more about the letter and some of the best practices that you're using to get the phones to ring, because obviously people want to know, can they just draw up their own letter? I mean, does it go postcard? Is it a letter, or is it a snap pack that works the best? I mean, walk them through what you found to be successful.
Well, our most successful responses have been on letters and envelopes. I mean, we do the little tear-apart snap packs, and we do postcards, but, you know, after mailing, I don't know, we've probably mailed, gosh, 500,000, maybe a million, somewhere between 500,000 and a million pieces in the last 4 months. We found the letters that work the best. And, you know, usually something pretty simple to invoke some curiosity to just get them to call. But one thing that we've noticed is these homeowners, they don't know that their loan is owned by Fannie Mae. I mean, they make their payment to, you know, Jorge Santa Cruz on this letter here makes his payment to People's Bank, or they make their payment to B of A, and they think that that's who owns their loan. So we have to educate them a little bit about, you know, how Fannie Mae owns their loan, even though they're making their payment to someone else, because a lot of people, I think, just get these letters and throw them away. So, you know, the letter talks about how we can, you know, refinance their house even if they're upside down on their equity. It talks about HARP. It talks about Obama that put this in place. Simple. You know, this person's using a local phone number because he's mailing locally. Sometimes we use toll-free numbers, but, you know, the letter's pretty self-explanatory that, you know, they can qualify for a refinance even if they're upside down on their house, and showing some pretty low rates on the mailer.
That's interesting. That's great. Well, we've got some questions coming in, and we'll just answer these in the order they're received. And if you have any questions that you'd like to ask our panelists today, go ahead and use the GoToWebinar control panel over on the right-hand side of your screen, and I'll go ahead and get those questions answered by the panelists as soon as possible. Jeff, response rates, we've got a couple people that look like that they're current clients of yours that are giving a shout-out to you. You know, one particular person said they got a 2% return on this particular mail piece. But what's the expectation out there in the marketplace for HARP marketing?
You know, I've been seeing 1 to 2% response like 90% of the time in 90% of America, you know. Every once in a while we get into a tough market like maybe Orange County, California, where I think 50% of the population works in the mortgage business, and super high loan amounts, super savvy, you know, type people that maybe don't respond as well to direct mail. And we've had a couple people mail those markets that have gotten like a little less than 1% response. But it only takes, you know, one loan to pay for the marketing and make money. So most of our clients are funding 5 to 10 loans, depending on their sources for, you know, who can fund these things and how they can put the deals together.
Well,
so that's, you know, 1 to 2% response, pretty good. average.
And if you were to send out to maybe a local market area, you'd maybe have a better opportunity than if you sent out to a certain county or a state that you didn't live in? I mean, would that be true?
Well, we do both. We have a lot of just single loan officers that are mailing their local area because they know the area. Chances are really good they're going to mail somebody they know on the list, their local market. And then we have large mortgage companies that are mailing the entire state that don't care about local. So we can do either way, but if we have our preference, I would like to start in the local area because, you know the market, you know the area, you know a lot of the people. So.
Yeah. Well, I'm going to ask you one more question, then we're going to get to our lender experts and start asking them some specific questions on qualifying, submitting, and funding HARP loans. Last marketing question is that based upon different guidelines, is there certain legal aspects that you need to maybe warn the people that are on the call today that there may be certain things that they can or cannot do in their particular state and that they need to check with their local authorities before they go out there and do a HARP marketing letter?
Yeah, I don't know all the laws for every state. I know some pretty important federal laws. I don't think there's that many specific laws state by state that you really, that are that much different. Obviously your license number, in MLS has to be on the mailer. There's certain things we can't say. And then there's certain things that we have to say. For example, if you use the word Fannie Mae or HARP or Freddie Mac on your letter, if you're going to use their name, they're requiring us to put 4 different sentences on the letter talking about how the homeowner can look up their loan to find out if it's owned by Fannie Mae, the fact that they've made changes to the program and that this is the new HARP 2.0. There's 4 different things they require us to put on the mail piece if you're going to use their name to keep you in compliance with Fannie Mae and Freddie Mac, and then obviously all the other regulating bodies that are out there that we have to pay attention to. Regulation Z, if you put an interest rate, let's put an APR and a disclaimer of what the loan is. So we can coach people through all that when they call. And then they might want to run it by somebody in their state if they think there's a special law in their state.
Great. Well, I'm going to close up this last poll on just where everybody's at in terms of marketing, just to get an idea of whether or not people are out there marketing for this particular program. And then I'll share these anonymous results with the rest of the participants just to get a feel for who's actually in the business of marketing and who's maybe just working their own personal database. So go ahead and cast your vote in the last 5 seconds before I close the poll. 5, 4, 3, 2, 1. Thanks, everybody, for participating, and we'll go ahead and show those results now. So we got quite a few people that are actually spending some money and doing some marketing for HARP. And Jeff, how long of a window do you think that this is going to last, and before the market gets really saturated or dries up with just the standard of just a new marketing product or new program being rolled out?
That's a great question. I mean, we did mailings for some people right when this came out that got over 3% response, and now we're mailing that same market area and seeing only 1% response. So saturation does have an effect on response rates, but a lot of times people jump in, a bunch of people jump in, and then 50% of them get out, and it kind of comes back up again. So I mean, the program's good through into 2013. I know we're going to be marketing and funding loans for the next year and a half on this thing. I think that there'll be a market for it no matter what. Some things will change, but they're going to get calls. They're going to fund some loans, regardless of the saturation. It'll be profitable. Dave, one thing I want to say before we move into our other expert panelists is I know I have a lot of clients that are on the phone, and I'm going to ask my clients that are out there to think about what you might be able to share with our audience on funding these loans. Some of these guys have taken, I know a guy in Arizona that took 82 incoming phone calls, submitted 20 loans. A bunch of them blew up, and I think he ended up funding 10 or 11 loans. But, they've learned a lot from taking incoming phone calls and submitting a bunch of loans, running them through DU. They've hired extra processors just to run these things through and collect STIPs. So I just want my clients to be able to share some things, with the audience at the end of this call, if that's possible. So I just want to give them a heads up and maybe gather up a couple things they might be able to share with the group. That was it.
Yeah, go ahead and throw those comments through the GoToWebinar control panel, those of you Overflow Works clients that are on the call. And let's go ahead and introduce our expert panelists. First, we have Chad Levinger with New Penn Financial. Chad has got a tremendous amount of experience in wholesale lending, and we're excited about having him on the call today. Chad, thanks for being here.
Dave, thanks for having me.
You bet. And next we have Todd Elbrigo from CMG Financial. Todd has also been a umpteen-year veteran of wholesale lending. I think that combined we have 250 years of experience between the three of these individuals. I mean, these people have lived and breathed wholesale lending for the majority of their lives, and it's exciting to have people like Todd and Chad and Mary on the call with us. So Todd, welcome to the call.
Thanks for having me, Dave.
And next we have Mary Shaver, the prestigious Mary Shaver from Flagstar Bank. Mary has been somebody that's been a leader in wholesale lending out there in the San Diego area, and today we get an opportunity to kind of pick her brain on some of the best practices that she's been able to see happen in this HARP specific niche. Mary, welcome to the call.
Hello.
All right, well, let's jump into this thing. The first question we're going to ask everybody is just how are you getting DU approve eligible on borderline deals? I'm going to start out with Chad. And Chad, any specific best practices that you're seeing out there in terms of borderline deals getting done?
Well, I can say I'm seeing a lot of these deals, and I think the most important thing to make sure is when you're on the phone with the borrower, make sure you take a complete application, because if you don't, the findings you run through DU are not going to be complete. Making sure that the application is 100% complete, making sure that your assets are completely in there. The two most, the things that I see the most as far as factors that determine an approved eligible, debt-to-income ratio and credit and the completeness of the application.
That's great. Todd, how about you?
I'd echo what Chad has just said. The other thing I would emphasize is assets. I would throw in the kitchen sink when it comes to assets on the 1003. Both Fannie Mae and Freddie Mac like assets, so the common mistake that I see is that we put in just enough to close the deal. I would actually throw in as much as possible the first time around, even if you have to verify it. Otherwise, you're just going to keep rerunning and rerunning. So that would be my 2 cents.
Great. Mary, and you?
Well, I mean, the one thing that you want to watch for is whether you're getting the property inspection waiver or not. And Fannie Mae is now on many of their findings posting what Fannie Mae sees as the accepted estimated value. If you didn't get the property inspection waiver on your initial run, look at your findings and see if Fannie Mae is offering you an estimate of value. And if you rerun it at that value, you should be receiving the property inspection waiver. That is a very valuable thing to have. Also, I mean, the expanded approvals, there's a lot of those that are occurring right now. Sit on those, hold those. Those are probably going to be much more available to close in the near future. So, I mean, just start compiling those. Don't give up on those, but maybe set those aside.
Yeah, what would you say in terms of forecasting for the future? I mean, how far out before some of these EA1, because that leads us right into the second question. How far out before these opportunities are going to come down the pipe, Mary?
I really can't say. The program is evolving. Everybody's very overloaded right now. So once we shake through this first batch, you'll see some enhancements to the program, but it may be a couple of months before all of that is, really shaken out and available.
We're hearing rumors of somewhat HARP 3.0, Mary. Is that true? Somebody told me maybe even as soon as June we might see some expansion of the program. You're probably hearing some of the rumors out there.
There very well could be. I mean, the problem is capacity in the industry. So, it's how quickly all of the lenders that are still out there doing it can roll it out and, get it working. So, yeah, it's coming. It's definitely coming. And, I mean, the one thing is these borrowers aren't going to go somewhere else. So, just kind of be patient, get them in there, get them ready to go, and there will be more opportunities.
That's great
info.
Chad, any more comments on what to do with these different referrals?
Well, yeah, I can throw a few things in here. If you're running DU and getting EA1, 2, or 3, some suggestions to potentially turn that into approved eligible is, very simply adjusting the loan term from a 30-year fix down to a 25 or a 20. That will, in turn, give you a better rate because the rates are always lower on lower terms. Doing a borrower-paid loan versus a lender-paid loan to keep the rate and the cost as low as possible. And then what Todd said, I think, is make sure you input as much assets as possible, including 401ks, stocks, anything with retirement, and then being as conservative on the property value as possible. I see a lot of brokers that are throwing in maybe some values that are, a tad bit escalated, and I think as clean as you can throw that into DU, it's going to give your best results.
Yeah. And now, Todd, does CMG, do they do EA1, 2, and 3 referrals?
Yeah, we are doing EA 1, 2, and 3s at this time. We do need the property inspection waiver with the finding, but we are doing them right now.
Great. So that has there's quite a bit of questions coming in terms of, or some discrepancies. So there are some lenders that are doing those and some that are not, but there are some additional restrictions or qualifications that have to happen. So appreciate you commenting on that. The next question we have is that what are some of the best practices for submission on Fannie Mae versus Freddie Mac? There's been quite a few questions about, why is it that some lenders are not doing Freddie Mac? And so, Todd, do you want to go ahead and start off with that one?
Absolutely. All three of us are doing the Fannie Mae. We're doing Freddie Mac right now. I think when it comes to Freddie Mac, you really have to know the ins and outs of Freddie Mac. It's just speaking honestly on this one from what I'm seeing, Freddie Mac's more difficult to get that accept finding out of. You really have to watch your DTI, that it's under 45%. You want to ensure that there's no revolving accounts that are over 50% utilized, meaning outstanding balance to available credit limit. It's a much tighter box, so to speak, for the Freddie Mac loans. So that's the main thing to know about Freddie Mac, is really knowing what they're approving right now.
That's great. Mary, do you want to touch that one as well?
Well, Flagstar suspended the Freddie program for other investor to Flagstar. We are only doing Flagstar to Flagstar Freddie right now. There's issues with the HVE and inconsistencies on that, and so we are waiting until Freddie really gets that really working properly before we roll that back out.
Okay. Chad, here's a question from one of the audience members. John asked the question, what can you do when DU says the property is not a Fannie Mae loan when in fact they've gotten verification from the servicer and Fannie Mae that it is? Is there anything there in terms of discrepancies in property addresses that may be in error or anything of that nature?
It could be, and a lot of times too, keep in mind to be eligible for the Fannie Mae DU Refi Plus HARP 2.0, your loan also has to have been originated prior to June 1st of 2009. So a few times I've had some brokers submit files that are being serviced by Fannie Mae and may qualify for the program, but as it turns out, their loan was originated after 2009. So that's one, and then yes, two, sometimes occasionally you do have a property address discrepancies.
Great. Any other comments from Todd or Mary on that particular issue? Is there any common themes that you've seen?
So really your only option there is to contact Fannie Mae directly and see if they can assist you with it. Sometimes there is an address discrepancy, but the lender can't do anything. If the findings themselves from Fannie Mae are not giving you the eligibility, there's nothing that the lender can do on it. So it's really, you can give Fannie a call. They do have some ability to correct some things.
Right.
So Dave, real quick, just from looking up tens of thousands of loans on Fannie's lookup tool, we found sometimes when you put the borrower's address in, if you spell out the word street or if you put ST period, that could be the difference of, match found or no match found. So, it's real, fidgety on the address. So put as least information in there as possible. Like if you look at the Fannie Mae lookup tool, it only requires an address and a zip code. Don't put the city and state in, because a lot of times we've noticed where Fannie Mae looks at a zip code and calls it a different city, which is crazy. But and I don't know how that all ties back into when you're running DU, how it's looking at that loan and making sure that it's Fannie owned. I don't know if it ties directly into Fannie's lookup tool or exactly how DU is looking at it, but it could be a little difference on address. So watch that, because you could literally tell your borrower, sorry, your loan's not owned by Fannie, when it really could be, So just wanted to throw that out there.
The other thing you can do is go to United States Postal Service, USPS.com, and type in the address, and it will give you the United States Postal Service standardized address, which is what Fannie Mae uses on their system. In fact, that's a great tip as far as best success on getting property inspection waivers, the whole works. Use the USPS.com standardized address for your property.
Interesting. That's kind of a legal address, and that's good. So we put all of our mailing lists through the U.S. Postal Soft, standardizing all the addresses. So that's good to know, Mary. Thanks.
There's another question from Jerry. She says, on the date of 5/31/2009, can we do loans that originated or closed prior to this date, or does it have to be sold to Fannie Mae by this date?
It has to be sold to them by that date. May 31st, 2009, that's the cutoff. Fannie and
So
Freddie.
they could have funded a loan April of 2009, and if it didn't get sold to Fannie, then we're out.
Correct.
By that time, yeah, we've experienced that a couple times.
Thanks. I appreciate that, Todd. Any insight on entering addresses on condos in DU? There's another question from Jason. Seems like that's a little touchy. Has anybody experienced that issue?
This is Todd. What I would recommend in this case, and Mary threw out some great suggestions there too, I would also get a copy of the original note and use the address that's on that note when they do the lookup.
Great.
I've noticed down in Florida there's a lot of apartment buildings that got converted to condos. So instead of having, an address with a unit number, which technically a condo would be a unit number if you own it, it'll have an APT number, and it looks like an apartment because they never changed the legal postal address. So you might watch putting in unit number, APT number, with the period, without the period. I don't know, it'd be worth running it a few different ways just to double, triple check to trying to find that is Fannie Mae owned,
Great. Let me just make one more final comment or question from Dolores, who's on the call. Do all three of you do correspondent business, or are you strictly broker only?
Flagstar does both correspondent and broker.
Todd?
Yeah, CMG, we are opening up correspondent, so we're doing both correspondent and broker.
And Chad?
New Penn Financial currently is only accepting broker business, but soon, I'd say within the next 6 months, we should be opening up the correspondent channel.
Great.
Hey, Dave, can they all explain their guidelines just real quick, too? I know everybody's got some different rules, on LTV max. Like for each lender. Do you mind maybe throwing that out there?
Yeah, maybe we'll kind of lead into that with this next question. The fourth question is how to generate and approve eligible when everything else doesn't work. So if maybe you can address that particular question and then give us a little bit more feedback on your particular guidelines, maybe some differentiating factors of what each one of your organizations represent.
Well, Dave, I'll go ahead and lead right into that. New Penn Financial, we'll go back to what we talked about earlier. To generate and approve eligible, again, just to be as thorough as possible, and then follow some of the other tips we've discussed with respect to addresses and assets, and making sure that everything is as complete as possible when you upload the file to Desktop Originator. New Penn Financial currently is accepting DU Refi Plus Unlimited LTV and CLTV as long as you have a 680 middle credit score. Max 50% back-end debt ratio, and of course, if everything else fits in place, we will consider the file, and we are also doing them for the agency jumbos.
Great.
And this is Todd. I'll jump in now. When it comes to what else can you do, I think we've pretty much discussed everything. If you've taken a complete app, thrown everything you can, there's always the possibility if you've got a spouse that wasn't on the current note that resides in that, you could add them to. That might be something that you could do as well. But above and beyond that, we still need to get that approved eligible for the engine. There's nothing we can do to trick it really or do a manual underwrite on our side. In terms of our guidelines, CMG currently is accepting pretty much anything. Freddie, Fannie, as long as we got an approval on it, we don't have any overlays in terms of LTV or DTI or things like that. The only caveat I would say to that would be for an EA level 1, 2, and 3, as I said previously, we do need that property inspection waiver.
This is Mary Shaver. Flagstar is currently on Fannie Mae product. For owner-occupied, we're going up to a 150 LTV with an unlimited CLTV. Now, anything over 105, we do require the property inspection waiver to be offered. We do not want the responsibility of underwriting and appraisal because we lose some of the waivers if we have to do that. So over 105, we're looking for the property inspection waiver, and that's available up to 150 LTV with unlimited CLTV.
Great. Todd, you want to chime in on that as well?
With us, as long as we've gotten accept from LP or an approved eligible finding from DU, we will go with a full appraisal if that's what's being asked for if we don't get the property inspection waiver. So either way, as long as we got the full approval, again, our caveat would be if it's an EA 1, 2, or 3, we do need that property inspection waiver.
Hey, I got a question for the audience. This is Jeff. Somebody told me that they'd go in and submit their loan through DU, maybe pricing the loan where maybe they were making 3 points on the loan on a $250,000 loan. It's $7,500, obviously, but they would get maybe an EA1, but they'd go back and put in a different qualifying rate, maybe lowering the rate a little bit, and they'd get an approved eligible. Have you guys experienced any of that? I mean, maybe they want to price their loans a little bit thinner just to get an approved eligible versus an EA1 or 2 just by lowering the rate that you're offering the borrower. Does that happen? Does anybody see any of that?
Jeff, this is Chad. Yes, I've seen that happen a few times where either lowering the rate or a combination of lowering the term and the rate happens, goes from an EA1 to or 3 to an approved eligible.
So they might be able to play with that.
That brings up another question. And if any of you have not voted on this poll, just in case you have to cut out earlier, if you'd like more information from our panelists, please go ahead and throw in your vote for this particular survey. We don't want anybody being contacted by somebody that they don't want information from. So please go ahead and put in your vote if you'd like more information from our panelists after the webinar is done. But one of the questions that was submitted was, are any of you seeing a significant number of people using buy downs as a way of qualifying since the person is already underwater on their loan anyway? Mary, do you want to talk to that particular issue?
Sure. We're not certainly anything that lowers risk, which would be a lower interest rate, therefore a lower DTI, is going to help. But I mean, also what we're discovering is that a lot of these borrowers don't have means to do a buy down, because if they did, they would be just paying their mortgage down a little bit. So reducing the amortization seems to be more successful, just I guess more doable, because the borrowers can handle that. The DTI tends to not be as big of an issue as just funds to close, funds to buy the interest rate down, and funds to buy the mortgage down.
That's great. How about you, Todd? Are you guys seeing any buy downs happening?
I've seen it happen occasionally, and pretty much the same ratio, I believe, that Chad and Mary are seeing. When it comes to really getting that approval, I've seen more times than not reducing that term is really the most effective way to do it, particularly on the Freddie Mac side. Reducing from a 30, if you don't get the approval there, down to a 20-year fixed has generated many accept findings. The question then is, can the borrower really afford it, and can they keep up with that stuff? But, that's another one. It would come down to rate and amortization to, try to tweak it to get that approval.
Great. The next question we have for our panelists is how to get a HARP loan through underwriting at warp speed. Now, that may be a little bit of a stretch right now with everybody's turn times being a little bit delayed because of the influx of submissions, but obviously, besides the basic stuff of having a good, solid, complete file, are there any specific tactics or tips that you could give to the participants on this webinar, starting with you, Chad, in regards to getting a loan through your organization a little quicker, and maybe just talk a little bit more about turn times with your organization?
Well, currently, all files, all refinances with New Penn Financial were between 24 and 48 hours in setup, and then about 7 to 8 days in underwriting. So a total of about 10 days, which is not that bad. It's pretty much industry standard right now. Some are a little better, some are a little worse. But Dave, you pretty much hit the nail on the head. I mean, making sure you're as complete as possible when you submit the file. Property inspection waiver does help. Then you don't have to get an appraisal. If you do have to get an appraisal with New Penn, and if you order it through our AMC, typically the turn times with them are 4 to 6 business days, or calendar days, I should say. So that is pretty quick as well. So we're turning these deals from start to finish, and trust me, I am starting to see a lot more of these loans. We're funding a lot more now, but we can get these loans done from start to finish in under 30 days.
Todd?
What Chad said is absolutely correct, and what you said too, David. Having that complete application, which includes, really the GFE and the disclosures, that's a common thing that trips some files up at the beginning too. So, short of that, having a copy of the approval findings in the submission, and pretty much having everything that the findings asked for within the submission will cut down the times and minimize the amount of prior to doc conditions or items needed to get to docs. As you can imagine, CMG is pretty busy. We're pretty much the only ones out there that I know of that's doing Fannie and Freddie unlimited. So we're taking a little bit more time than what Chad quoted, but we are getting the deals done.
And that's an important point to make, Todd, is that you're doing unlimited LTV, CLTV, is that correct?
Correct.
And Chad, what is your guidelines on LTV, CLTV?
With a 680 middle credit score, we are going unlimited CLTV or LTV and CLTV on Fannie Mae DU only.
Okay. And Mary, you guys do unlimited on Flagstar only, and you have some limitations on non-Flagstar loans?
Yeah, on Flagstar to Flagstar, it's unlimited. We will gladly do those loans. We will try our very hardest to move those from our high-risk loans on our books to the new product. So most definitely we're doing both Fannie and Freddie for Flagstar to Flagstar unlimited. Right now for non-Flagstar to Flagstar, it is limited to the Fannie Mae DU Refi Plus. And there are no set minimum credit scores on that, but we are capping the LTV at 150 with an unlimited CLTV. Our turn times are very bulged right now for standard submission. If you're not a delegated or you're not a correspondent or you don't have some of the other expedited channels, there are turn times. I mean, you're going to have to be locking these on a 45-day lock. We're very busy doing these.
Right. How about MI transfers? Chad, any tips or tactics on that?
Well, I will first start off by saying we are accepting, on these HARP loans, we are accepting MI transfers, either lender-paid MI or borrower-paid MI, with the major MI institutions such as Genworth, MGIC, United Guarantee, Radian, and there's a few more. But the best thing to do is just to make sure when you're talking to your borrower, make sure you do ask them if they do currently have mortgage insurance on their loan. If they do, just make sure and get the certificate number and find out who the MI company may be. If the borrower doesn't know that, of course, you can get that information from their servicer. And then upon submitting the file, just make sure that information is readily available to the New Penn underwriter. And the New Penn internal staff will, if there is current MI that does need to be transferred, we will take care of that internally by ordering the new certificate and moving the file forward.
Great. Todd, comments on MI transfers?
Yes, we are doing the same things with handling the mortgage insurance transfers. We're doing borrower paid and lender paid internally. What Chad said is absolutely perfect. We also get the MI info on our findings, so we should have that, but it's a good backup to have that information from the client themselves. We handle it internally. It's taking about 7 business days, we're seeing, for the mortgage insurance companies to turn it around, approve the transfer, and come back to us on the particular loan.
Great. We've got a last couple questions. We've got 2 more questions, and then we're going to try to get to a couple of the audience submitted questions. The last 2 have to do with non-owner occupied properties. Any LTV restrictions or any tips or tactics to decrease the hits on a non-owner occupied and get those to close? Start out with you, Mary.
Well, sorry. I really don't have any tips, but I can tell you what our current non-Flagstar to Flagstar Fannie Mae is. For investment property, we are allowing that up to 105, and that is for 1 to 4 units and warrantable condos. The nice thing about with Fannie Mae with condos is that we simply have to be able to, within reason, be able to determine that the project was eligible at the time it initially closed. And some of the things we look at very obviously are the condotel features. If there are condotel features on the property, it probably wasn't warrantable when it originally closed, therefore we would not do it. Some of the things that don't necessarily kill the deal are current owner occupancy of the project, because that doesn't mean that it wasn't eligible at the time it closed 2 to 3 years ago. So with investment property, it's a little more tricky, especially with condos, but we are doing those up to 105.
Great. And you, Chad?
Currently, right now, we are handling non-owner occupied investment properties, either single family or condominium. 105% is the max LTV, max 110 CLTV. And as far as tips, there's really, the key. I mean, we maxed out, I believe, I want to say 2%, 2.00 is the max hits to the rate where we maxed out at, but wouldn't say there's any specific tips. I mean, we try and keep our ads to the rate as low as possible. But, once again, 105% max LTV and 110 CLTV on Fannie Mae only.
Great. Jeff, there's a couple of questions about marketing, and I've got a poll up here, and if anybody'd like more information from Overflow Works on the marketing strategies and tactics that they do, please go ahead and cast your vote now. I'll close that poll up here, and we'll get to the final question. But, Jeff, in terms of marketing to specific HARP qualified candidates, I mean, you're going out there and you're bringing up specific Fannie Mae lists. What about Freddie Mac, and also what about the fact that there may be some people that have moved or refinanced since 2004 to 2009? How do you deal with that issue?
Well, first thing is if they refinanced their, 2009 mortgage and they refinanced, 6 months ago, there's going to be a new lien on title, so our lists are going to get updated, and that person would no longer be on our marketing list as a HARP prospect because the loan date does not fit with this whole program. So that's an easy answer. We update our lists every, week on county recorded data, new liens going against the property with new dates. So Freddie Mac, we don't have a way to 100% guarantee Freddie Mac owns a mortgage loan right now. We have that availability on Fannie Mae, and if you're listening to this phone call, you're hearing from all 3 of these lenders that Freddie's pretty tough right now, so we haven't put a lot of emphasis on that. We do have some lists available that would have more emphasis on a Freddie Mac owned mortgage, that are probably going to be 70% accurate by targeting, specific, lender names. There's a lot of lenders that sold a lot of their loans to Freddie Mac, like say a Wells Fargo, for example. So we could build a list for you that would be, a good list, but not 100% accurate. And just think about that before you do it. I haven't had too many people successful with marketing Freddie Mac yet,
Right. Well, our last question is just how to go about getting approved with lenders that do unlimited LTV transactions, and we've had a chance to hear from these particular expert panelists. I'm just going to go back through the individual experts and ask them any specific information that needs to be shared with the participants today to be able to get connected to more information about your organization. So, Chad, do you want to start off, and then we'll go to Todd and Mary and just wrap up here today?
Absolutely. Well, first and foremost, Dave, thanks for having me today. I cannot tell you how excited I am about the future of this program. And if you would like more information on becoming a new Penn Financial broker, please do email me at the email address you see on the screen. I would be more than happy to send you a broker package. It would be as simple as completing that broker package, and our turn times to approved brokers are between 5 and 6 days. We do not run credit on our brokers, so that is an added incentive. A lot of brokers don't want their credit run a ton of time. So if you'd like more information, send me an email, and I'd be more than happy to help you.
Chad, you're licensed in about 48 states, if I remember right, correct? So pretty much most of the nation you're licensed in, you can help them out in.
That's correct.
Okay.
How about you, Todd?
Yeah, and I'd like to echo that as well. Thank you for having me on this. This is great to talk about this and the opportunity that's out there for everybody on this phone call. For a broker package, just email me, and I will get you a broker package to complete. We are approved in pretty much, I would say, roughly, 80-85% of the country, so there's a lot of states we can cover, west, central, and on the East Coast. So just email me with your information, and we'll get that broker package to you.
And Mary?
Hi, this is Mary Shaver. My email address is mary.shaver@flagstar.com, and we specialize in the emerging correspondent program. We do have warehouse lines to help you get going in that. But we do, each account executive at Flagstar supports both brokers and correspondents. So we can really kind of guide you in what channel, and there are various levels of delivery channels, really what channel is best for your business model. It's very customizable at Flagstar on how you do your loans with Flagstar.
Great. Well, we just thank all of you panelists for being on the line today, and we're going to wrap up with Jeff talking a little bit more about the marketing packages that he has available, and we just thank him for hosting this particular educational webinar. And I think that everybody grabbed a lot of great ideas out of it. There's a lot of questions that are unanswered at this point, and I appreciate everybody that submitted a question. I will make sure for those of you that submitted that you'd like to have more information on best practices, we will share your contact information with our panelists so that they can send you out more information. And we'll just have one email that goes out with everybody's contact information on that. Jeff, do you want to wrap up and just finalize what you have in these HARP marketing packages if somebody wants to make their phone ring with new HARP candidates today?
Sure. So basically the 3 minimum order packages are, listed on the screen here and on my website. The silver package is basically saying, hey, I want to buy a good list of Fannie Mae owned mortgages, 100% guaranteed, that, in my zip codes with some available phone numbers scrubbed against the do not call list. We provide you the lender name, the loan amount, and the last loan recording date on your data. So you can just buy this data. You can call. You can mail it. You can, door knock. Some of these people are out door knocking. Getting kind of a beeping noise in the background. I don't know what that is. Hold on one second. I don't know if that's my phone or... So the gold package is basically includes the data and, of course, the direct mail letter printed and mailed out. So the gold package has been what about 90% of our clients have been buying to test this thing out. What is it, $3,675? And we mail out 2,500 letters. Our clients get anywhere from 25 to 50 incoming phone calls on average. And, they're putting anywhere from 5 to 20 deals together. The first loan you fund typically pays for the whole marketing package, so anything after that is real profitable. So that's the gold package, and then the platinum package is the same thing as gold package, except instead of mailing the letters out in a window envelope, we're doing hand-addressed names with a team of people that literally sit down and hand-address each envelope and put a 45-cent stamp on the envelope. It mails first class. Like a 99% open rate on the envelope, and we make the letter real personable, sometimes with your name, picture, local phone number, cell phone number. It really promotes that personal touch, and that's a real good response rate. So those are the 3 packages. However, you might want to get involved in this. we'd love to work with you. So just shoot me an email. I can do a conference call. I can show you numbers of how many loans are in your market area that Fannie Mae owns. I can show you all the data, some samples, whatever we need to do to, to get you involved in this thing and help you make some money on it.
Yeah, the best way to contact you, Jeff, is just to go to the website or to call the number, or would you like them to email you instead?
The best thing right now would be email me with your available time and what time zone you're in. Obviously, we've got clients all over the country. And let's set up a conference call to go through your exact needs, what you want. I mean, if you email me, I'll respond back, and we'll get something on the calendar, in the next day or today, tomorrow, and talk it through. That'd be the best way. You can call me on that toll-free number, and I'll, hopefully be able to get to the call. Just I might not have a half hour for you at that second, so I'd love to schedule a call.
Great. So best number to hit you on, Jeff, or best email address to hit you at is the jeffbush@overflowworks.com. Is that correct?
Yes. Perfect.
Great. So everybody, I appreciate your time today and sharing this opportunity with all of our expert panelists and with Jeff Bush from overflowworks.com. It's been our pleasure to serve as your panelist and moderator today. And so thank you so much for participating. If you'd like Jeff's contact information, I'm showing it on the screen once again. And so be sure that you give Jeff an email or a phone call out if you'd like more information on how to generate more incoming phone calls from HARP, Fannie Mae, Freddie Mac, any particular FHA streamline. You do it all. Is that right, Jeff?
Yeah, that was something else we were going to bring up. If you're interested in marketing FHA streamlines for this new program that's, you can pull case numbers June 11th, the reduction in mortgage insurance. I've got a library full of FHA streamline mailers that I've done over the years. Also reverse mortgage. I have some clients marketing reverse mortgages that are making 10 points on these loans, $20,000, $30,000 broker checks. So they're investing some marketing with me to find seniors with equity. We can also do traditional refi mailers. Believe it or not, there's a few people out there that still have equity in their homes, and they don't need HARP, and they're good borrowers, good credit. We can market them for these incredible low interest rates and make your phone ring with people that have equity. And if you didn't want to do the whole HARP thing, so I do all kinds of mortgage marketing, whatever they need, I can help with.
Great. Well, thanks everybody for your time. That concludes our webinar for today, and we look forward to the next opportunity that we can share some excitement and some enthusiasm and some education on your mortgage needs. Thanks, everybody. Have a great day.